from Secrets, the channel for learning about trading and investing. Welcome to quick market analysis for tomorrow, March 23rd, Thursday 2023, an expiry day. Let's get into the charts straight away. So here you have the daily charts. Once again, it's a third day of greenery, and it's a high after above the previous 6 days in the Nifty. And here you have the Banknifty, which is also a small body, indecisive, dodgy, right below the moving average resistance. And that's again 7 days high, closing basis, 7 days high, and the third day of green that we are seeing. Yeah, probably the second day of the green in the case of Banknifty, right? So yeah, so momentum has climbed up into the sideways on both indices. So this is summarize what's in favor of the bulls. So there's a second day of the gap up, right? The gap up we are seeing for the second day in both indices, and it's kind of a flat day finally, 0.26% only, because after the gap it stayed flat. So the 6-7 days close to close basis, as we said, it is closed above that, and it's at a crucial support zone again, from where it had bounced up with a reversal wick candle, pin bar, right? And then it's moving steady up, not steady, it's moving up and then showing some green. Today was a flat green day, yesterday was also not that big green. Yeah, Banknifty is still surviving above the 200 EMA. Bollinger Bands has got downside expansion, but it is temporarily halted, and then beginning of the contraction signals are shown. But the bias is still bearish. But yeah, the fact that the expansion is halted itself is a good thing for the PS. So higher low pattern in the medium weekly charts. Lower high is there. The short term charts. But medium term it is still higher low, which is not breached until 750 is breached. Crude oil is still below 70. Futures oil is having a short covering build up on both the indices for tomorrow expiry, just one day before. So that short covering, if it works out and nothing drastic happens from the Fed side tonight, then tomorrow you can see a big up more the short covering in the futures oil. In the options oil, PCR is 0.82 and 0.87, closer to the bullishness, very close, not that far away from the bull zone. So that's also positive. And both indices, Bank and Nifty, have climbed into the sideways momentum. The strength is reduced. It has taken a bend. The strength, the DMI positive negative indicator, trend strength, the ADX indicator is showing that strength, the bearish strength is decreased, right? And if you see this major 6 or 7 industry sectors, you can see that the IT and the auto, except that others are all maintaining the sideways momentum. And the industry heavyweights that contribute maximum, only the IT stocks are down, Infi and DC, so those are all the sideways momentum, not at the bearish momentum anymore. And HDFC Bank all did well. HDFC Bank did well. HDFC didn't do well today. Lines also did okay. This is yesterday's, I didn't know that. India VIX has cooled off 8 to 8% and fallen down below the 50. Probably back to the lower reaching is what it indicates, right? So what things are in favor of the bears? You can say, we are still in a down trending move. The correction is still in progress. We can't say that it's completed. It's a lower low, lower high pattern that's formed. 11 to 12.5% of both the indices has happened in the last 3 months. Small doji indices is not that, it's more towards the bears. The move is not big. It's not that bullish. It's indecisive as to what today. So 3-4 days of up move is happening, and doji means more probably is towards downside considering the price action that we have got. Nifty is still below 20 DMA. Band expansion is halted, is slowed down, but it's having a bearish bias still because the price is below the median. Momentum is still in the bearish zones. Trend is in the active zones. Although the strength is reduced, it is still in the active zones. Momentum, trend, price action, volatility, candlesticks are all more towards the bear side. So you can see US index and Fed event is coming in tonight, 11:30 or something. So the selling pressure will be high in case something goes wrong, and the short covering rally will be big, and but keep a close watch if that's what happens there. There's a huge impact now on markets. FIs are selling aggressive, and today was only day where they bought some 60 crores or something in cash. Otherwise, last 9 days continuously they have been selling. So almost all the days, 1 or 2 days in March, complete selling is what we are seeing. No support from the institutional side that way. IT sector is not able to move despite the fact that the market, because of the banking impact, I would believe, because most of the IT clients are BFSI. So even after the Nasdaq has picked up, the IT sector is not revived in our case. And rupee is depreciating. No change, 82.58 week levels. So that's also in favor of the bear. So overall, if you see, But in fact, like, we had 3 days of green and 5 to 7% of up move from the previous, not up move, down move from the previous swing high. After that pullback, we had 3 days of green continuous and closed above the 5 or 6 days of high. But the thing is, it is closed indecisive with small body, and we have a Fed event tonight, and then it is halted and turned indecisive because of that. And so, it's waiting for that to come out. And so, otherwise, the charts are saying it's bearish with respect to the momentum trend, volatility indicators, and all that. So, there could be some cheer up that happens if global markets are recovering, and then Fed event turns out to be positive, dovish, and then it and the indices are moving up and breaking out. The big moves are happening means that it will see a good impact on markets also. But otherwise, the charts are saying it's still bearish. So, a support zone and a good bounce up can come. The relief rally can happen, or a breakdown happen. Anything can happen, depending on what the event turn out to be. It's going to be a non-event. Then the things will continue in a slower phase. But if things are turning good, then good breakout and recovery rally could happen. Or if things are not good, a breakdown can also happen. So levels watch is 17,250 on the upside, then 17,500, 40,000 and 41,000. Downside 7650 and 750, and then 37,386, 400. That levels on the Banknifty. That's the upside and downside levels that you keep a close watch. So some relief rally can come in. All depends on what the events are going to come out. Right? That's what the market candlestick saying. It's indecisive. If the candlestick is indecisive, we are not to predict anything. Right? So markets are indecisive, but it wants to go up. It's awaiting hoping for post things to come out, but doesn't know what to do right now. But otherwise, the charts are bearish overall. Chartically it is negative. So that's a summary. And in case you're subscribed, please share it to others. Please like, give me your feedbacks, and if you like it, and then share your comments so that we can improve. If you're not subscribed, please subscribe and share it to others, please. And that it helps us to keep motivated by having a few more subscriptions. We have very few subscriptions, And if you're interested in the Telegram services, please click on the link in the description, and then you can avail that. Always stay hedged, play safe, don't play with naked by yourself. Have hedge positions, and if the market goes down, use it as SIP mode investments. You can use option strategies, various to use it for investment and rental income as well. Check out the playlist for that. Right? Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.